Welcome back. You're watching Money, 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 and this week we are discussing your rights as a bank customer and how you can go about using the grievance redressal mechanism. So, Mr. Mahajan, now let's broaden out the whole conversation. I mean, as we discussed earlier, the role of the board is to make sure that banks are giving fair treatment to their customers. There is also this RBI charter which lays out 5 basic rights that I have as a bank customer. Do go into some of the details there.
A right of fair treatment, a right of transparency, fair and honest dealing, a right of privacy, right of suitability, right of compensation and grievance redressal. Okay. These are the 5 rights.
So, fairly comprehensive. Yeah.
These are 5 rights. In fact, all the 5 rights are coming out of all our, if you refer to our customer commitment, bank commitment to the customers, banking code, there are 90 parameters which describes all the 5 rights. Okay. So the customer should be advised beforehand the terms and conditions of all the dealings with which, so that he can take an informed decisions. Okay. Nothing should be introduced in the dealings in between. Sure. And whenever you want to change any terms and condition, a 30 days notice is a must to the customer, so that customer should decide whether to continue dealing with that bank or to find out some other banker.
So I'm just going to go over these in slight more detail one by one. The first right is the right to fair treatment. Both the customer and the financial services provider have a right to be treated with courtesy. The customer should not be discriminated against on grounds of gender, age, religion, etc. So that's fairly self-explanatory. Adil, this right to transparency, fair and honest dealing. And here the RBI's charter says that contracts or agreements should be easy, transparent, they should be well communicated to the customer. The third is the right to suitability. And I think that's the most interesting one, because the RBI charter says the products offered should be appropriate to the needs of the customer and based on the assessment of the customer's financial circumstances and understanding. Now, this is great in sort of spirit, but the question is whether it's being really followed, throughout the banking system. What is your view?
See, I can commit from the point of view of what's happening with digital and technology channels. Now, what we find is all of these 3 rights that we're just discussing, the digital channel, because of the nature that it is transparent, you see it right there. The terms of the product, the pre-closure rates, the lock-in period, is there a fine associated with early withdrawal? In a digital product, right, you have to communicate this upfront because there's no way of not communicating it. Sure. So what I feel is in the online media, which is starting to pick up, that information is transparently communicated, and because it's a machine that's running these rule set, it tends to be fair to people also. And we believe that this medium is reducing mis-sell.
Sure,
in fact, I will like to further add on the right to suitability. Right of suitability has arisen out a lot of complaints about mis-selling. Because a lot of complaints are there. Yes. The product has been thrusted on us. We were not aware about its risk associated. For example, if 80-year-old person is sold a jewelry product with a 5-year locking period, it is 100% case of a mis-selling. And bank has now to record why a particular product is being sold to so-and-so person, so that later on, if a dispute arises, that type of a record come handy. So right of suitability means that sell the product which suits the customer. Correct. Not what you wanted to sell. Okay. So this is a right of suitability. I thought let me add.
Absolutely. So these are the first 3 rights. The fourth one is right to privacy, which is fairly self-explanatory. Personal information of a customer should not be shared without his or her consent. And the last and perhaps the most important is the right to grievance redressal and compensation. Before we talk about the whole grievance redressal mechanism and process, Mr. Mahajan, let me ask you for some examples where the grievance is genuine in nature, so that customer knows that he or she has a legitimate case. What are legitimate grievances?
Legitimate grievances is the one, what is delivered to him is contrary to what is promised. Okay. That is the first check of that point. Suppose a person has been promised a return, which is nowadays not being returned. Suppose he is being promised you will get an interest of 9.5%. Suddenly the banker felt he has misread the tariff table of his bank and it should be 8.5, not 9.5. And he unilaterally changed the rate of interest to 8.5% instead of what he has contracted with the customer. The customer, it is a legitimate grievance of the customer to ask the bank to pay him interest at 9.5%, not at 8.5%, notwithstanding he has committed an error.
Sure.
Because it is a customer right. Customer has invested the money believing the rate of interest is 9.5.
Sure.
Not because believing that he has quoted a wrong rate. So if he goes to banking ombudsman or he lodge a complaint in the bank itself and there is a system in the bank, policies are there, it will definitely be redressed and customer will get the interest which he is entitled to. Okay,
well, on that note, let's take a break. And now that we've understood what comprises a legitimate banking grievance, on the other side of the break, we will talk about the redressal mechanism. Whom do you need to approach? How do you go about this? What is the role of the banking ombudsman? All that discussed after the break.